Hello, and thank you for joining us at xm.com for this Forex Preview video. We'll be exploring the Reserve Bank of New Zealand's policy meeting this week. Joining me today is Marios Hadjikyriacos, investment analyst. I'm Christina Marujos. Marios, the RBNZ is concluding its policy meeting early on Wednesday, and the bank is widely expected to keep its policy unchanged. However, it looks like markets will focus on the tone of the statement, given the grim economic data we've seen in the country lately. So do you think the bank will adopt a rather dovish stance?
Hello, Christina. Well, they are very dovish already. I just think they will maintain their very dovish stance. The RBNZ throughout this crisis has been one of the most aggressive central banks out there. Their approach was go hard and go early. So if you don't have much firepower anyway, it's better if you spend all of it right at the beginning. You get, let's say, more bang for your buck in a sense. It's more effective that way, or at least that was the thinking. So they cut interest rates to zero. They signaled they are open to negative interest rates. They launched a massive QE program, and they even kept the door open for purchasing foreign assets, which is crucial because of its effect on a currency. Under normal circumstances, the QE would have tanked because of all of this, but instead we saw the currency plowing higher, powered by the risk-on mood in the financial markets, the retreat in the US dollar, recovering commodity prices, and New Zealand's successful containment of the virus itself. Where do policymakers stand now, and what will be the focus of this meeting? As you already pointed out, economic data have deteriorated in August. Business confidence is down, manufacturing PMI is down, and spending, as gauged by the retail card spending, has also slumped. So yes, they will keep a very dovish tone, I believe. The question is exactly how dovish. The RBNZ has already signaled much of what it will do over the coming year. At its latest policy meeting, it very explicitly and very clearly, it said that the next rate cut will probably come in March. The question of this meeting is, how firm is that commitment? Is it a flexible commitment? Could the first rate cut come in February, for example, or slightly earlier if the economy deteriorates? And the other one will be the QE program. How likely is the RBNZ to buy foreign assets once it runs out of domestic bonds to buy? Long story short, I believe that they will keep a very dovish tone. They will keep the first rate cut in March, but the overall tone of the statement, I believe, will be extremely dovish, and they might even talk up the possibility of them buying foreign assets.
Now let's have a look at the Kiwi. As you mentioned earlier, it has been relatively strong lately. So how do you think it will react on the bank's decision?
Well, if they maintain as dovish a tone as I expect them to, that would argue for a small negative reaction. And I say small because this meeting probably won't be a game changer anyway. The RBNZ has already sent very clear signals about what it wants to do, and most of that is already priced in. So if you look at market pricing, there's nothing priced in over the next few months. But if you look at February and March, suddenly there's a whole rate cut priced in, and there's another one after that fully priced in for around August next year. The market has already priced in most of what the RBNZ will do, so any reactions in policy meetings nowadays are likely to be relatively modest. So you might see a small negative reaction on the meeting itself, but I would argue that the biggest determinant for the QE will be, first of all, whether the recent sell-off that we've seen in stock markets continues any further, meaning global risk sentiment, and the second one might be how the election that's coming up in New Zealand plays out. There's an election in less than 1 month. The opinion polls suggest that it will be a landslide win for the incumbent Prime Minister, but if we see the polls tighten or something like that heading into the event, it could create some volatility in the QE.
Marios, thank you for joining me today, and thank you for watching this Forex Preview on the Reserve Bank of New Zealand Central Bank meeting here at xm.com.